Hey, everybody, welcome. Welcome to
Morning.
Real Talk, Real People, Real Estate. We're here with Kristen and Pete, and of course, Kyle. And we're
Hello,
talking to
hello.
lenders all month. And I think, people don't realize how important the right lender is for their personal situation. Fast talkers like me, then there's slow talkers and people that want to talk for half an hour, and other people want bullet points. So when I talk to a buyer, I really want to understand their personality and what they need, because you guys are going to be joined at the hip with your lender for at least 45 days. And I always recommend I tell people, interview your lender just like you would interview a realtor. It's the
Mhm.
same thing. So I'm going to let Kristen and Pete come on, and I want to tell you guys one thing with Kristen. We're working on it with a client right now, and this sums her up. So it was Sunday night. I was just checking in, and she goes, "The client, she's so sweet." And you wouldn't always hear that from a lender, but Kristen really takes the time to get to know the people and cares
She
about their
does.
situation. And um, Brad, God bless him, we had him on last week. He's a fast talker, like from New York, which works fine for me with somebody that needs bullet points. But for somebody that wants to chat, it's Kristen. So go ahead and tell us what you do, what you love to do in lending, what you guys specialize in.
Okay, thanks so much for the introduction, Patty. My name is Kristen Robertson. We are Rescom Mortgage Lending, located just in South Orange County in San Clemente. I want to also take a moment to introduce Pete Lopresti, who is the owner and senior mortgage loan officer and broker of our company. Pete, are you over there?
I am. Yeah. Hi, good
Okay.
morning, everyone. Pete Lopresti, pleasure to meet you.
And
Yeah,
Pete, you and I should do a special call on reverse mortgage.
Yeah, let's do it.
He's one of the best versed people in reverse mortgage that you'd ever want to talk to.
I
Okay, go
agree.
Thanks,
ahead.
Patty. Been doing more of those lately. It's
Yeah.
interesting.
Yes,
Well, it's the boomers.
Yep. Yep.
that's
Yeah,
that's
they've built up
true.
all this equity. Now it's time to take advantage of it.
Yeah. And the program it's not as though I'm an advocate for it. It's not for everyone, but when it is for you, it can be a complete game changer.
Oh yeah, I got my mom and her husband into one, and they paid was their HOA, and they had
Hmm.
a beautiful house. They loved where they were living, and it worked out great for them.
Yep. Yep.
Yeah, that is true.
Absolutely.
And something I wanted to say, Patty, and I do appreciate you mentioning it right up front, is what we like to do is we really like to figure out where the person's goals are, what they have going on, and by having the conversations with them that you mentioned, we get to find out more about them than if we just drill in and do bullet points, take an application, and put them into a program we think,
Absolutely. Yeah.
right? So sometimes we find that they've come to us for a certain loan program, and that loan program isn't the best one for them. And it is through those conversations that Pete and I have where we're able to determine that. And sometimes it does take, a few phone calls, but it's always what's best for the client.
It's just like doing our buyer consultation. I need to fully understand, and also because we want to be able to pinpoint what they need. We don't want to
Hmm.
waste their time on, oh, here I have 5 programs, look at these. No, here's 2 that are the best for your needs. Let's talk about those.
Right,
Same, it's the same kind of process.
right. And sometimes people see advertisements online and they come to us
Oh
for the
yes.
advertisement, and it doesn't fit for them at all.
Yep.
So
Right.
You guys, I'm sure, deal with that multiple times a day, because
Yes.
there's
Yeah.
always, it's just like clickbait with the media. There's always
right,
the teaser thing. Yeah.
Yeah.
right. And
Well, it's always the teaser lower interest rate with a lot of buy
Yep.
down, which the interest rate sounds great, but what we do is we always send a comparison of loan programs. And clients are really well versed. They research on the internet.
Yeah.
Most of them really know, what they're doing. But since we have the information and the current information specifically to where the market is, we send them a comparison and just show them the breakdown. It's really point blank. If you pay this much for a rate buy down, it'll save you this much per month, and it'll take this many months to break even on that additional cost. And
Why
if we're
don't
in a
you take
declining,
2 minutes to talk about what a buy down is?
so
Not
a
everybody
rate buy
understands what a
down
buy
is
down is.
essentially paying interest up front. So let's say hypothetically you had a 6.75 rate on a $700,000 loan, and you wanted to buy the rate down to 6.375, and that saved you maybe $180 a month in payment, but it cost 2 points, $14,000. It would take 100 months to break even. In that scenario, a lot can happen in 100 months. You probably won't have the loan in 100 months. There'll be an opportunity to refinance at some point at lower no cost with a lower interest rate. And right now, when clients ask my opinion if they should do a buy down, because I show them the options, they have to know what their options are.
And we can always ask for a seller concession for that money.
Right. But even with that, Patty, I wouldn't do a buy down at the moment. The reason why is because we're in a bit of a declining rate environment. We're starting inflation numbers aren't rapid. We're not seeing rates skyrocket. They were at the height in October of 23 at just a hair over 8%. And now we're back down to the mid to low sixes. So if you're going to get a pricing concession, I would suggest doing a 3-2-1 or a 2-1 buy down. And the reason why is, and I can speak to that if you like, but the reason why is that money is held in an escrow account and it goes back to the borrower, the buyer, when they refinance. The money's not lost. A rate buy down is gone forever. Never see it again.
Right.
Maybe there's a little bit of a tax benefit. You can write some of it off with discount points, but the money's gone. So this way, if rates drop in 6 months or 18 months and they're able to refinance to a much lower rate, we catch it at the right time, they can get some of that money back. And then they can use it at that point for a rate buy down, which may be a long-term loan for them.
Better benefit.
Right.
And this just goes back to what Kristen was saying. You guys, spend a lot of time with each customer and figuring out what is going to be the best situation for them.
100%. Yeah. And I mean, Kyle, and as you know, as a realtor working with clients, they're all different, right? I mean, everybody has different
situation is different. Yep.
Yeah. And they all have different relationships with money and finances. So they all think
that's
different.
vast.
Yeah. So it's how do we meet them where they are and give them the information that they need and give them a service based on that, based on their relationship with money, their goals. And that's the piece that's kind of a little tricky, but we've all been in the business for a while. And I think you kind of learn that over time.
Yeah,
absolutely.
You're working with and how you can best serve them. Because at the end of the day, we're here to serve. That's
100%.
We can't serve our clients. We don't have business. So.
And right now, Kristen's working with one of my clients that it's taken a couple of months because there were some things that needed to fall into place. And she's been every week just making sure everything is on track and keeping the client supported. And we've both been there for questions. And now Kyle's going to be showing her property out in Corona. And we're like a week or two out, but it's exciting too. And the client's excited and we're all excited. And so it really matters.
Yeah.
Yeah.
It does. It makes a difference. And there are many places where you can just go online and fill out the application and you get fed back numbers, and that works for some people, but sometimes that's a disadvantage. And when you do that, there's number one, no human connection.
Which is terrible. If you have a problem, which you likely will. I always tell people there's one thing in a deal that will go sideways no matter what. And you know what? The other thing I tell them, if you go with a big bank, we're going to solve a problem over a weekend that a big bank isn't even going to see until Monday afternoon because they've got 200 emails to get through.
Right. And there's a common misconception that online bigger bank, no personal interaction will yield lower fees and a lower interest rate. Right. That's not the case. Typically, depending who you're working with, you can have the service and the lower fees and the lower interest rates and have a long-term relationship with a lender just as you do with your realtor.
Yeah, that's the best.
Yep.
Yeah. And I always tell my people, you're kind of stuck with me for life now because I follow up with all my past clients every 3 or 4 weeks. Whether the last one I did was just, do you need a handyman or a contractor for any spring cleaning or whatever you're doing? And it's very simple, but just them knowing you're there and you remember them and you care about their situation is huge.
Sure. Absolutely.
It's a people business.
Yeah.
It's definitely a people business. Calling them by their first name and like, oh my God, you remember?
Yeah.
It goes so far.
Yeah. 100%.
That's true.
100%.
And going to your real estate agent and asking for, or I mean, it's fantastic. You guys are sending that out, but asking for those types of people, roofers, handyman, contractors, all of that, you guys have so much more experience with them, and you're going to know the good and the bad with each of
Well,
those. So it's great to
it's
give
just
them
like
out.
when you refer a realtor or a lender,
Mm-hmm.
you're kind of holding them to a higher standard because now they're referred.
Mhm.
And you're putting yourself on the line that, you know, you've suggested this person, so they better do a good job.
Right, right. It's very
I have a
true.
new handyman in South County that I adore, and he's slaying it. So I mean, that's the best.
That's great.
It is the best. Definitely. Well,
Yeah, I remember someone shared with me once, I forget who. It was a while ago, and they shared, you know, if you're the person that people choose to come to get referrals, you kind of become a hub.
A
Mhm.
connector. Kristen's a
Right.
connector too.
100%.
Yep.
She's a total connector. But what that does is that keeps you top of mind.
Absolutely.
And then that keeps the people that's in your inner network top of mind, right? And
Yes.
it just perpetuates. And that always kind of stuck with me.
Well, you know, I grew up in Orange County and I've been in the business 13 years, so I know a lot of people, and it's a good resource to have.
Mm-hmm.
And it's just part of your community.
Right. Absolutely.
Yeah. So community is everything.
that's true.
So now what loans do you guys have a specialty that you?
We don't really have a specialty, Patty. We have the ability to do commercial. We have the ability to do those types of loans, but our real focus is residential 1 to 4 units. And the way our company is structured is really kind of like a boutique lender. We have a lot of room and a lot of ability to take on a large amount of business, but we kind of keep our relationships tight, and we kind of have a certain amount of business that we're comfortable doing. And that's what we focus on. So
I love that.
Yeah, all of our conventional and VA loans, they're all funded in-house. So we can make decisions, and we can fund, and we can disclose, and we can do
I didn't
things
know that.
quicker. Yeah. And
That's
then
great.
and then the other types of loans, such as FHA, rehab loans, construction loans, reverse mortgages, and all of the non-QM loans, such as bank statement qualifying or profit and loss qualifying, or even now stated incomes back to some degree with a large enough equity position. Those are all broker transactions.
Okay.
But we have a lot of relationships with investors, and we pair that, we prune the tree, so to speak. Sometimes we'll let that investor we're not crazy about, but this investor is good, and we'll add this to our roster, and we'll have a relationship with
I
them.
like the prune the tree.
Yeah.
Very
Yeah,
nice
you-
way to say
you
that.
It's important.
You kind of have to sometime, right? Just
Yes.
to keep it.
You can't
Yeah.
just keep everybody because they're not all going to perform the way you want
Right.
them to.
And a lot of times too, they change. You know, the investors, maybe there's a new parent, and now they don't operate the same. And it's not like we have to know if we're in escrow, because we're representing you. You referred them to us. And if we fail, you fail in a sense. And we can't
everybody's unhappy.
we can't have that. So we're not going to submit a loan unless we know for sure that we can perform and we can get it done. The stuff in house, there's no question. But the other types of loans, are non-QMs and such, we have really long-standing relationships with those investors, and we're comfortable with them, and we get them done quick.
Well, that is great. This is our 15 minutes, you guys. I want to thank you. This is going to go out to all my buyers because I want them to know you before I say, hey, give Kristen or Pete a call. Now they can put a face to a name and know what you guys are about. And that is so important. So I want to thank you for being on today.
Awesome. Thank you, Patty. Great to
Thank
meet
you
you,
for
Kyle.
having us.
You as well.
All
Pete.
right. Take care, everybody.
Take care.
Thanks. You too.